So this is the orange line is the Fed funds rate. That is the Federal Reserve changing the amount of money it costs to borrow money. And then the white line is the S&P 500. And so what I want to bring your attention to are these yellow vertical lines here. So every time that the Fed decides that they're going to raise rates, let's go back to 1974. The Fed starts raising rates. Well, the stock market didn't just fall over right away. It slowly started to roll over. But it wasn't until the Fed pivoted and started to lower rates rapidly that you actually saw the final crash. Zoom ahead to like 1981. Feds raised rates like crazy. I think that got up to like 14% or something. It gets up to the top. There's like a slight pause, and it's not the stock market gained and gained and gained until after the pause, they quickly pivoted on rates and dropped them drastically. That's when you got the downturn in the stock market, which seems small on this little white line. It seems small on this graph because you're looking at 70 years of data. But trust me, these crashes here were massive for their time. Let's zoom ahead again to the future. This was in 2000, the top of this. So this whole run up then was the dot-com bubble, and then in 2000, it wasn't until the Fed pivoted is when you started to see stock market crash. Same thing here, most recently with COVID. But now it's getting funny because see here that the Fed funds rate stays flat down here between the year 2008 after the great financial crisis all the way through. And they started to raise rates. Well, this whole time the market was going up, 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 up. And so then it wasn't until you didn't get your COVID dump until they decided to pivot on rates. So the thinking here is that if you're a hedge fund manager, if you're a government and you're sitting on a boatload of assets, why not dump them when they're high and then borrow money to buy them back 5-10 times cheaper when the bottom? That's the thinking here. That's why it takes the pivot on rates down to near zero interest rate for these to occur. Because then effectively what you could do is sell a higher price and borrow money at almost no cost to you and then buy back all the assets.
Yeah, like buying the dip. And then what's impressive to see here for most people to really catch the drift is because markets are always kind of forward looking. So they also need that kind of story to justify why the pivot. In other words, they're doing what's called right now being disinflationary, where it's slowing down just like it's protected, 25 basis points, but they still technically rising rates. So it's going to rise all the way to the point where, like what you used to talk about with the plumbing, and then something is going to break. And when it breaks, that's when the market crash in reaction of the break. And then they have to pivot to then turn on the printer like crazy to then again cover because things are going to break. So that's why it goes like that. And then you can expect somewhere around March, April, because based on what the Federal Reserve were talking about, because I watch the fade minutes and stuff. We're gonna be keeping getting those 25 basis point. Powell saying maybe another
Yeah,
two
one or
rate
two, I would say
hikes.
probably.
Exactly. And then you'll be like Axis is talking about, you're looking at March. That's when they're most likely gonna be like pivoting or at least stop raising rates. And then you could expect that little mini crash right at that point. And then unemployment will be most likely higher at that point because the Feds is not trying to create too much like stock market going up. Because then what's going to happen is going to increase inflation again. Because the mechanism is if stock market goes up a lot again, and people get too rich again, then they start buying stuff, and then again, not enough goods and services, too much paper, aka inflation goes back up.
Yeah, so these red circles here, I just want to remind you guys, these are 3 to 7 month windows. So it's not that you have time to because right now, so these are like short, that's kind of roughly the time frame you're looking at from the point that they stop to pause rates or to slow them down. Well, so then this was the first slowdown from 0.75 down to 0.25. So now this chart will start to level off now. What you're looking at is basically a 3 to 7 month window, which lines right up with Kareem's roughly April timeframe out to midsummer timeframe for a potential crash in the market. So your recessionary period could come, but not until more upside. So the thinking here is that you're going to see max pain now to the upside from people that are like, oh, well, the market's going to crash anyways, so I'm going to wait for lower price. But then Bitcoin will go even higher because it'll be like, well, if everybody's waiting for lower prices, then the smart money can run the price up against them because their ultimate goal is to make other people FOMO in to become exit liquidity until the market actually becomes bullish after the major crash that's coming.
Exactly.
I hope that kind of makes sense. It's all reverse psychology.
It's the pump and dumps of the regular markets that have been going on forever, right?
Yes.
And one more thing, which is key, this is the reason why we've been saying that what we're experiencing right now, obviously getting off that bottom is very similar to what happened, when we were at the 3K, 4K bottom rise up. Because when you combine all those things together, you say, okay, we're getting the run. Bitcoin's going to go in the most likely, lower 30s or slightly higher. But again, it's that 60-day period that we're talking about, which coincide with the funds rate, which coincide also with what the stock market is doing, right? Creating that slightly higher low, so to speak, and then you get that little dump. But the way people really FOMO in and again become exit liquidity is after that initial pump. You're gonna get the golden cross. People are gonna get excited. I talked about it when I was on Well Stream 10 days ago, and then they're gonna forget everything that we talked about here about oh yeah, and then when they get back in, that's when the rug gets pulled.
And it's
So you gotta
perfectly
keep
good
that.
because it protects your bottom buyers, but it still leaves opportunity for this to sell off massively back down.
Exactly. So I can see it, dude, like you have your line perfectly. I can see, 32, maybe 38. And it doesn't really matter about what exactly, it's about just keeping the macro things, which is ask yourself 2 months from now when the Fed's about to pivot, doesn't matter what Bitcoin is, that's the part you need to start getting worried because that's most likely when the rug is going to come. Now, whether we get to 30, 35, or 40, who knows? Just look at just the
Yeah,
time
just to show
frame.
you
That
guys a
end of
little
month.
TA on how you calculate that. You basically take the measured move from the breakout. So if you can see these lines, I'm going to make them a little more bright. You can really see them. This downtrend started back at the break of 33, 34K. And I think pretty sure that one of these big sellers was maybe Apple or Tesla. It might have been Tesla that sold basically at their buy-in price the rest of their holdings. That started like a liquidation event, as well as with everything that was going on with all the bankrupt exchanges. But so basically how you do this is you take this measured move from this breakdown or from the width of this high to the low here of the pennant that was created, and then you copy this out to where the breakout occurred, which was right here, and then you measure that out. So that has you roughly hitting basically the target here is 37,000. I wouldn't use that as like the Bible of it, but I would say like, okay, so we can take that number, 37,000, and then we can also run a Fibonacci retracement level and see that the 50% retracement and the 618 are key levels. So then you're kind of landing within this zone. So basically 32,000 to 38,000. So that's kind of how you come up with a certain target zone.
Yeah, and I'm so glad that you mentioned Tesla, and it is others like Apple's and Google, because it coincides also perfectly with why I like also Bitcoin versus stock market. Because again, when the stock market, aka the big one, Tesla at the time, because those are the big mover, were going down, then it drags, the whole stock market down as well. And now that they're all pumping, Tesla is pumping, Rebecca pumped again to get, and then you got all the earnings, the Google
Yeah, the earnings
earnings.
were this week for like Caterpillar, for Meta, for was Tesla this week? Forget.
Especially tech, not the Dow Jones so much, but tech,
It was tech.
because tech is what pushed Bitcoin. So NASDAQ. So now, if you put literally Bitcoin in NASDAQ, you get to see historically every time NASDAQ go about
Yeah, we
10%,
can do that.
Bitcoin.
This is the NASDAQ index chart. So you can see that it was actually underperforming the rest of the stock market. So for some context here, it just only broke its major downtrend resistance in January 23rd here. But if you look at the Dow Jones, it broke out way back in November of last year. And then if you look at the S&P, it broke out about the same time from this major downtrend resistance. But it took a stab at it back in December, and it failed. So this was actually quite eye-opening that you finally got actually this test candle here, and then it broke above, and now you're having continuation on that, and it's still not quite even made upper side limit here.
And the cool thing about the overlay, all those little mini runs, those little bull runs, because you can have bull run in a bear market. People not to confuse.
This is a weekly
right?
chart, by the way.
Exactly. So every time they run about 10% when you overlap with Bitcoin do about a 30 to 35% rise. So if you extrapolate that similar thing, this is the leading indicator. Again, all starting from the Fed, because the Fed put everybody at ease by just, because what market hates is unpredictability. Now that we predicted the 25 basis point and is what's happening, and then powered through the word disinflationary, which is good, meaning inflation is still here, but it's slowing down at its rate of acceleration, which is great. So this is why you could not guarantee, but look at it like, Bitcoin still got a way to go because NASDAQ is allowing it to rise. So, because all those big companies, they probably have bots in the markets like, hey, when this goes up to this point, move some funds over here to the risky capital.
So to your point, Kareem, you can see here that the NASDAQ ran 14% off the low in 34 days, and then, Bitcoin ran 45% in the same time frame. So it's just proving your point that they look the same, except that Bitcoin's a high beta, more volatile asset that overperforms in those conditions. So another cool thing to look at, just something for you guys to put into your portfolio book of measuring and toolkit. You do that. You do Bitcoin divided by the IXIC, which is the NASDAQ. I'm going to get rid of Bitcoin, and now the chart will look a little different. I don't know if you can recognize it right off the bat, but on the regular Bitcoin chart, that's the top, and so this is Bitcoin over This is Bitcoin measured in NASDAQ here. Look at how it's just
it's just starting, because it could run again.
perfectly bouncing off the 2019 key levels here. To me, it's not done, because here's your top. And that would probably be somewhere around that 32 to 36,000 range.
32 to 38 that you were drawing earlier. That neckline. And then if you were to throw a little mini, TA, not that it matters because we're mainly macro people, but usually when you break from that, falling wedge, you go to the previous, resistance that was there from the long-term support. So it just makes sense.
Yeah.
Same way after the COVID dip, you see where we kind of ran up to that previous top, and then we kind of stick around for a little bit, and then it went up a little more after that. So
this one here, this COVID would have been March
exactly.
here, right
and
here.
then it went up, and then it paused right around that mini top, which then become now support. That's literally.
This is amazing to me, like how this looks on this chart. This is basically just like a triangle, but if you look at the regular Bitcoin chart, which I'll do now, it looks just completely different. Look at COVID. That spill was way nastier against the dollar than it was against NASDAQ. So it's funny because Bitcoin becomes a hedge against NASDAQ in some ways, just because the upside's so strong, it actually diminishes the volatility over the long term. It's so interesting when you start looking into this stuff deeper. But yeah, so just Bitcoin looking great. So we finally got above that downtrend resistance, and now it's supported by the 0.236 Fibonacci retracement level. So I want to say one more thing about basically comparing this breakout and this cycle to 2015. This is something like a lot of other smart individuals are seeing as well, is that we may be in this run up here before you come back to test the lows, and as many as 2 times. And then this is technically a lower low, but it was such a quick wick up on the weekly that you might get an opportunity to buy lower, but smart money is going to buy that up in a snap.
I believe it's more like the 4K one. The 4K bottom.
You think it's like
I think it's one of the most likely things to do that, because again, it could run. We could still be in a quote unquote bear market where it's like we might not do a new high, but look at that. It looks almost picture perfect.
I agree. You'd be roughly, and then because look at how it perfectly taps the 618.
Because this is what I would say, right? The play, most likely, that's what I'm thinking. We get to that zone within that 2 months, like we talked about, with the Fed rising 25 basis points month over month, right? And then when they're ready to pivot, that's where it does that little double top. I don't know if we're going to have a COVID moment, but then I see a nice cool off. And then towards the end of the year, that's when we hit that escape. But I think we get just that mini bull run still in the bear market, if that makes sense.
I agree. I think that your max pain right now is to the upside, because so many people got left behind on this most recent move that now want lower prices, and so the market's not going to give it to them, period. It's time to leave those guys behind that didn't buy the bottom here and here and here. And now you're trading above it sideways, and there might be attempts to break that level, but eventually you're going to build up, and you can't go out too far in the future, because we're still looking for that breakdown by May, Fed pivot. So then the time frame here doesn't give you a lot of time. It gives you like basically 2.5 months to basically get the price up to this level in the most violent way. You know what I mean? And this is basically where
final confirmation. Yeah, and that final confirmation, what we talked about, is going to happen literally this weekend or early next week. Meaning, it's how the consolidation is going to happen. And I use the golden cross as my perfect indicator, because on the 2015
which moving averages is the golden cross? Do you remember?
Daily between the 50 and 200.
50 and the 200 on the daily.
Yeah.
Let me ask you guys both this real quick. Do you guys think that the Fed pivot or the Bitcoin halving will have a greater effect on price, this Spikle?
Fed pivot first. Bitcoin halving has effect, but it's just one fundamental. It's not that good. It's there. It does matter. But the Fed pivot is really the key. That's why I told people, don't get too into the technical 32, 38, whatever. Just ask yourself, when the Fed's about to pivot, be ready. Because that's most likely when the rug is going to, because everything is connected. Because it starts from there. Then the market gets spooked. Then stock market gets hit. Then crypto gets hit because Bitcoin gets hit. And then liquidity starts to move the other way. Because it's all about understanding the plumbing so that you get to see where it's going to be. Now, technical helps along the way, but Fed pivot is key, because if the Fed do something you don't expect, who cares about your TA? It's not going to matter. You're just going to get
What do you think?
Well, right now, because we know it's going to happen, I'm just trying to determine if it's going to look like 2015 or if it's going to look like the 2018, 2019 4K. And it's all going to come down to how do we do the golden cross? Because in one case, on the day of the cross or right after, there was a dump. Because that's also how they trap liquidity. Oh my God, golden cross! Everybody
We
gets
can go
FOMO
back
when
and
they should have.
look.
Yeah,
Yeah, here's
You said the 50 and the 200, right?
yeah. It's a daily daily
whoops.
chart, not weekly.
Gotcha.
It has to be the daily chart.
Shout out to Jamie Cameron and French Made Bullies and Hex on Air. They both joined us here at Sandy Beach. Dave Down Under also asked, has anyone ever done any homework on what happens price-wise on launch day of new blockchains and exchanges? Like, but I don't know, like the last few exchanges we've had are like different versions of Uniswap, and then you'd almost have to go back to EOS and Ethereum to see what happens when a big layer one drops, wouldn't you?
You got to first ask yourself, what is the state of the market when the thing's about to drop? But let's finish this up
Yes.
here because this is very important. I see.
Yeah,
So you see one around the 4K zone
Right
of
here.
that previous, right? You see how like we didn't dump, right? It consolidated by going sideways.
Yep.
The cross happened.
I'm right with you, but I think the same thing's occurring right
Boom.
now because you're still in an uptrend. See how this on the daily is in an uptrend?
Yes.
It's actually in an ascending broadening wedge, which can do this. It's basically demand is increasing. It's getting more volatile to the upside.
Because the people waiting for it's gonna come back, and it's not happening, and the FOMO kicks in, and then they become the candle that takes it to 30K.
100%.
Because now they're
like,
chasing.
okay, it's confirmed 25K support. This is the thinking. Here's 25K. You get up to 25K. You maybe go all the way to 28K. You come back hard down and you test 25K a couple times, and then somehow you start to build up structure, and then these are the guys that jumps in on a confirmation trade. And the reason why I know this is because I consulted with one of my trader buddies today, and he's actually like upset because he thought the Fed announcement was going to bring prices back down, and it didn't. So he missed his chance to buy, and now he's like, well, I'm still waiting for lower prices. Well, he's going to be waiting a really long time. And so what happens is most people aren't patient, and they'll just buy up here at a confirmation trade.
And literally they're the reason why the chart looks the way it's gonna look, because they're gonna incrementally FOMO in at the time. And that's what I'm saying. It looks like the 4K, because the one in 2015, you get to see how he did a golden cross and then he automatically dumped, and then he runs still after. But that's why I'm thinking.
Yeah, so your golden cross, guys, is coming.
And next week is gonna be that cross. So how we cross is gonna tell me if I'm confirmed on the 4K, which is my assumption right now. Because again, this felt like a disbelief, because most people, and I told Abu Wells 10 days ago, most people didn't thought this would happen because they didn't do the other market analysis. They thought, oh yeah, and Fed's not gonna do 25 basis points. People thought they would do 50. Now, boom,
Yep.
this thing.
This is it, you guys.